Hey, happy Mondays, everybody. It's your boy MC Fire coming at you again with another trading day. Kind of doing some breakdowns. If you guys caught the Sunday video, you guys already know what trades we're looking at. So we're essentially just gonna kind of recap, recover some of that, and kind of take a look at the markets as they stand right now and let you know this is a pretty good opportunity to buy. So if you're new to the market, awesome, welcome. If you're not, you're an experienced trader, you guys probably already know the market is slightly selling off. And we like that. Why? Because it's an opportunity to buy. So let's go take a look at the charts now. Sweet. So we're on the charts. We got the Qs here pulled in. And as you can see, right, they're kind of selling off early morning. Now, whether that holds, we don't know. The support resistance levels there. Got it. But really, what I want to take note is that if we do as we break below this rotational zone, selling off is good. Why? Because it gives you an opportunity to set up a position for acquiring more shares, right? If you've been watching the channel, we know that losses are lessons, and we also know that buying the dips is where you make your money at. So as the market is kind of selling off, um, just get an opportunity, you get an opportunity to buy. So we're gonna go take a look at some of those opportunities now. So we got CL here. That's actually rallying light sweet crude. We'll go ahead and take a peek at that. Right? Light sweet crude is rallying. It's up about 1% on the day from Friday. And that's good because it essentially tells us that a little bit of the confirmation flight to safety. When you see like oil rally, a lot of times you'll see like the ES and the Qs kind of pull back at around the same percent, right? So oil is pushing about 1%, and you've got the Qs dropping about 1.6%. The yes dropping about 0.7% on the open already. Russell's dropping about 1.9%. So that kind of balances out, right? You're essentially exchanging energy for the market and in a kind of a rotational sense. We kind of capitalized on a little bit of that of the XLE trade that we took. Did catch that rally from the dip, right? Caught that outsized candle right here, traded above. We went on and took that play to the upside, at least just to the 8. Nice little base hit, nothing too crazy. It was a reversion to the mean. So you got to see a lot of times we take momentum plays, but you got to see a reversion to the mean trade. Um, so let's see about some of the plays that could be potentially setting up to make your money on the downside, right? Because we're options traders, we make money if it goes up or down. You have the opportunity to, and so we definitely want to take a look at some of those plays now. We're gonna go look at DLR. Um, so if this play, right, this play has kind of sold off, but if we can get above the level that we've shown here with the mark, the 178.25, we get above that level, definitely looking to be a buyer in an uptrend, right? So it's taking a dip, very nice opportunity that it took the dip. Digital real estate, realty trust, if DLR crosses above that, we definitely would look to be a buyer, seeing that it's essentially sold off for about 4 or 5 weeks. So if it sells off about 4 or 5 weeks, we like that. Gives you an opportunity to be a buyer and take a position to the upside. It's actually respecting the 21-period moving average, which is even better. So that's why we brought him to the front of the classroom. Also, if you look at XLRU, another one that we kind of shouted out, a good opportunity to short the rip there, right? So it's kind of new downtrend, trending sideways, plenty of room to the downside to around 3 ATRs. We'll be looking to take it if this sells off, if the market gets a little heavy in utilities. So just something to watch. Essentially, our plan is in place. If we can get down there, we'll take that trade because it hasn't really gone anywhere. It's kind of consolidated. So if this breaks, it's going to be a major break. So we're watching for that as well, for that major sector. Catch you guys up to speed. Goldman Sachs and Bank of America. Yep. We have again very similar situation to DLR with the dip by there and kind of respecting the 21-period moving average. If we can later trade above the 576.31 mark, we could definitely take a position to the upside in Goldman Sachs, right? Keeping with momentum to the upside. Some uh some positions are going to be how can I put it? There might be a little sector rotation in the market, but overall, if the market's heavy, right, there's going to be some winners, some losers. So you want to be on the side of both, right? You want to have some up positions, some down positions. If the market's going to go heavy, something like XLU could be a factor. If the market reverses, something like GS could be a factor to the upside. We definitely want to keep both of those on your radar so that you have something to choose from when it's now time to make a decision. Right. Speaking of Goldman Sachs and making a decision, we're going to go to Bank of America. Very similar story if you wanted to make a decision on that as well, right? It actually respected the 8 peer moving average versus the 21, so a little bit more relative strength to Bank of America, right? How would we play this? We'd stop out at the low of that, target highs, nice little base hit, keep the momentum going, not try to bite off too much more than you can chew, right? If you roll it or whatever, that's really good because you take some profit off the table. Oh, or if you run it as a butterfly, get a high risk or low risk, high reward potential play. So you don't put that much capital up there, right? If you see up here, the VIX is at 1956 or 1954. It is increasing. So will the market be a little heavy? I believe just off the pre-market and the fact that these are selling off pretty vigorously, the market will be a little heavy. And that's good because if we go into the end of January, in the next Fed meeting, um, the rate cuts could be a factor here, right? We're going to bring up the actual Fed Watch tool here. Should have been pulled up already, but we'll come over here and build out the Fed Watch tool. Give me 1 second. Yeah, there it is. So you got the Fed Watch tool pulled up. Essentially, the next meeting is going to be on the 29th there, 29th of Jan. And the probability that is the rates aren't going to change, right? But if we forecast forward, right, you definitely the Fed chair has already said that he will cut interest rates 2 times next year. So I would anticipate maybe post first quarter, second quarter is when he's going to start cutting. Probably the post first quarter. So around March, April timeframe is what we can expect to see your first cut, unless things get extremely bad and he's forced to cut earlier, right? Have an emergency cut. In that way, just so you guys are tracking, during periods of high inflation, um, the wealthy do extremely well, right? So the people that own assets, the people that own stocks, gold, real estate, whatever, the prices of things tend to rise, and then you can leverage against those things to buy more assets. Unfortunately, so it's kind of you're in this weird quagmire where you gotta kind of take this stuff seriously because you don't want to be left behind on the next push. So these pullbacks are really good opportunities for you to enhance your skill level to be able to acquire assets so that when that eventual rally does happen, you're not sitting on the sidelines and you don't have any dry powder to play with, right? Economic news here. Zoom in a little bit so you guys can see it, but essentially we're looking at Tuesday, Wednesday, and Thursday. And then so free trading days for you day traders. Monday is definitely good to go. Let me refresh this because I don't want to be right on the button, right? So yeah, Monday, you guys are in the clear for Monday, and then you have on Tuesday, right? Uh core PPI. Wednesday in the recap is also core CPI for the US. So definitely watch out for volatility those days. That's gonna happen around 8:30 a.m. And then you have on Thursday there is core retail sales. I mean, unemployment claims really is a big one, right? The Fed is looking at unemployment to view the robustness of the market. They want people to be employed, right, and in working, right, and if that happens, good, right. But we also want to when you get that paycheck, you want to be able to afford groceries and stuff like that. Because then if not, there's a serious problem, right? And then I guess you're free essentially Friday, right? Unless you're doing forex pairs. The British pound is in flux there with their retail sales, but other than that, we're just kind of really looking at the U.S. market. Really not much going on the wings of the week, but in the middle, in the meat and the potatoes of it, you have essentially a meeting every single day. So keep that in mind. Well, if we pull back up the charts here, essentially the market opens in around 3 minutes. Yeah, just let's go take a look at Netflix here as well. Big player in the let's see the flicks. There we go. Right, a little bit of a dip buy opportunity there, but again, be prepared. Be prepared for a little bit more sell off. So that's why we have our net laid out there with our alert. If it crosses that, we can catch the opportunity as it's presented itself. We don't have to necessarily watch the charts all day. We can wait for the opportunity to present itself to us, and then take it as it moves forward, right? XLF, XLP. We're gonna go look at those guys because we did talk about them on Friday. It's kind of a recap on us Sunday's video, not Friday's video, Sunday's video, right? Same thing with the XLF, right? As you saw with Goldman Sachs, as you saw with Bank of America, very similar charts here. Pretty massive pullback the last 5 or so weeks, and then it's throwing very nice setup candles that if they get crossed, you can get back up in this rotational zone with potential to really rally. So I would be very interested to see that play out, and we would definitely want to take a play. You could take a play on Goldman, Bank of America, or you could take a play on XLF as a whole, right? If you believe that the whole sector is going to do good. Um, we've got TMO. Yeah, there we go. Let's go TMO. Right. So on the flip side, and this is probably more of a better option, right? If you start to see this kind of trade down to the downside, which we'll take a look at that on the 5 minute here in a second. This is kind of what we want to see, right? If you've got a downtrend and you believe the market's going to be heavy, and switch your plays to something that's been in a kind of a downtrend, had a nice rip, and it's set up to fail, right? As you can see already, it's already testing that level. So this is probably a more premium play that we would look at to take a position on with a stop out at what the high there at 557 16. That is and let's go look at, like, let's say the options on this puppy, right? Just to kind of take a look at the market opens up here. So it's not too expensive, right? This is for 4 days, about 1100. We'll essentially want it to be out for like 3 weeks or so. Yeah, not too crazy, especially if you're running a vertical there. It's the at the money option, the 50 delta essentially is going to be, or excuse me, yeah, the 50 delta is going to be 21.5, right? But when you juxtapose that against your 20 delta, or in this case your 18 delta, right? It's not going to be that much, essentially like 1400. So 1400 doesn't sound too bad to essentially have this for 3 weeks potential, if you believe the market is going to sell off. So we'll stand by for that. But guys, this is you know, this is essentially us breaking down to you that, hey, this is an opportunity. This is a buying opportunity for you. You definitely want to watch as the market pulls back. You make your money in the buy, not in the FOMO, not in the rally. So definitely keep that in mind, in this opportunity. Get your dry powder ready now, because when the Fed starts cutting the rates, you're going to see the market push. So in these pullbacks and these opportunities, don't sit on the sidelines. Be proactive early so you can be prepared while other people are sitting on the sidelines. This is MC Fire. Thank you guys for joining us. Hit the like, comment, and subscribe button, and check out some of the previous videos if you definitely want to see how we break down the market and how we put these guys on our watch list with the ETF DB. So thank you guys. Have a good day. Goodbye.